Thanks for giving us part of yours. No numbers at the bottom of the hour for us to break down, but today we do have some housing data, consumer confidence. I'd imagine the focus is going to be on the housing number as it has been in, well, for the most part, continues to be a pillar of strength here in terms of the U.S. economic scene and discussion.
Yeah, isn't it amazing that, let's call it 9 months ago, maybe a year ago, we were talking about the housing market and how it was just stuck in the doldrums. When would it recover? And now all of a sudden, not all of a sudden, but, this, like you just said, this is the pillar of strength for the economy right now. And, we need to see these numbers continue to be strong because that really is one of the solo bright spots of the economy right now, Ben.
Sure has been. Scott, I'd imagine that it's tough to ignore some of the solid results we've seen from retailers, quarterly results, especially with the unemployment benefits expiring not too long ago. There was some uncertainty in terms of what that would mean for some of the individual names, but it seems like, again, for the most part, they've been able to weather the storm or continue to weather the storm, and investors seem very optimistic, to say the least, about some of the results we've been seeing this week, or the last few weeks, now that I mention it.
No doubt about it. Retail has, let's call it buck the trend for the most part, given the dire outlook for many Americans. And like you said, some of the relief that has ended, we're going to get some consumer confidence numbers. That's going to be a telling number as well, because now that the holidays are upon us, now that the spending season is upon us, we've all seen the massive amount of Black Friday deals already, that have been advertised. How are people going to react? Are they going to spend? Are they going to be fearful that, some of the backstop that they've had, the support that they've had has been, pulled out away from them? So it's going to be a real interesting number. But so far, retail across the board has really, shown some strength over the last few weeks or so.
Sure is. Resilience, to say the least. Let's talk about what this means ultimately for the dollar. It's been coming off some, holding near that 92 level. It's yet to open up the door to the downside, but still continued weakness. And after coming off that 104 level, something to keep an eye on here, to say the least. I always like to say, when the market's on extreme, you want to have heightened awareness directed towards some of these products. Talk to us about what you have your eye on in terms of some of the fundamentals as well, not only the technicals and where things stand.
Well, the announcement yesterday about Janet Yellen really, puts a lot of pressure to the downside because, she is a very, very big proponent of fiscal policy. Mm-hmm. That's going to keep added pressure on the dollar here. We're down to the lowest level we've seen since September 1st. And you and I always talk about ranges, and the dollar certainly has been in that, very well-defined range, with 92 pretty much being on the lower end. And it is really testing that right now. And if we see that break, the dollar could probably hit 90 if we see that 92 level break.
Okay, this is the daily time frame here. If we could just take a look, as Scott was talking about the range that we've been in, testing the levels that he mentioned, again, that we haven't seen since September, that 91.72 level. But again, if we just take a step back, here's what Scott's talking about, potential for this 90 even level. I've got my eye on 88.15 if we take out this 92 level with conviction, with energy. Scott, we were just talking a minute ago with AJ, our Hong Kong correspondent. He was talking to us about the strength that we've been seeing in the Asia-Pacific currencies, the 6N, definitely a currency that we watch in terms of some of that reflection thereof. And we've been seeing strength there. Ultimately, I'm looking across the board. I've got multiple currencies that I'm looking at. The yen, it's come off the last couple days, it seems like, but it had been inching higher. You've got the 6A, the Australian dollar, some of the other foreign currencies. You can see what's weighing on the U.S. dollar, I guess is my point.
No doubt about it. And that was a real interesting, conversation that you had, especially with talking about some of the restrictions, the travel restrictions. But you look at the dollar in the Asian region there, and there's no doubt that it is a continued, if not strength, it's being supported certainly by the weakness of the U.S. dollar here. Sure. And we also watch, as you said, the Aussie dollar as well, which is tied so closely to Japan, to China, to that whole region there. And that's why you're seeing strength there. And that probably doesn't change anytime soon. And I'm surprised it's actually not a little bit stronger this morning based on the heels of the announcement yesterday with Janet Yellen and the weakness that we're seeing here.
Let's talk a little bit about the Brexit latest. I'm not sure how closely you've been following some of the ups and downs, and obviously, well, if you have been, hopefully you've had some Dramamine close by, because there's been some motion sickness associated with this one, to say the least. Yep. But it does appear as if, again, the back and forth continues, to say the least. What are you looking at here in terms of some of the latest? Ultimately, the British pound's been bid also, and that's probably weighing on the dollar in terms of what we were just talking about. And this is a reflection thereof in terms of some of the process that's been playing out, or at least the process backing away from a cliff kind of scenario.
Sure, and in this whole Brexit scenario, it seems like for about the last 3 or 4 years has been rinse, wash, repeat.
Yeah.
We get to that cliff, we get to that, deadline, then all of a sudden we get lured back in, we get pulled back a little bit. And given what's going on with the pandemic, with COVID, I would not be surprised to see Brexit almost take a little bit of a back seat over the next few weeks going into the end of the year as they try to deal with that. But you're right, the strength of the pound there is another reason, not another reason, but another maybe an outcome of the dollar being so soft. We're seeing the strength there as well.
Scott, let's talk a little bit about what's been playing out in treasuries. Very much range bound throughout the month of November. If you take a look at the bonds, actually, let's pull this chart up. I've got the 30-year on the left here. This is the hourly time frame. We're looking at pretty much the beginning of November on. We did see some volatility tied to some of the coronavirus, the vaccine news, but we established a pretty well-defined range throughout that volatility. 176 to the upside in the bonds on the left, down to the mid 169 handle. And well, we're for the most part smack dab in the middle, 173. Very similar situation in terms of the 10-year right now. What is this telling you as we're trading into the holidays? We've got a little bit of a lull versus some of the craziness that we've been seeing as far as some of the uncertainty related to the election. Some of the unknowns is tied to that. It does seem like the dust is settling a little bit here.
It does, and I was going to say there's a bit of complacency right now, which I think is a real good thing.
Okay.
Because the spikes that we saw over the last couple of weeks, when we saw the 10-year especially, kind of spike up towards that one even level, that's backed off a little bit, and this is in the middle of the range. And I think what we're seeing right now is that even though we get these, let's call it knee-jerk reactions, the bottom line is the underpinning is the Fed is probably still here to support these markets.
Yeah.
And that's a good thing. We need that right now. And Ben, this probably all flows into the beginning of our conversation talking about the housing market, is that, mortgage rates are still probably not going anywhere. Maybe they're not at the very absolute bottom end of the range that they've been, but they are still historically as cheap as they get. And that certainly supports these strong housing numbers that we've seen.